What's good, guys? It's Krabby Trades here, and today I just want to go over spotting the perfect entries using the Rev model. Now, most of you will be familiar with this model. Of course, it's a 22 model, just a lot more simplified, a lot more internal and external, especially with the ranges that I like to use. I have simplified it for everybody. It's easier to understand, easier to execute, it's easier to spot these models. I find them very fantastic. I can catch 3 to 6 of these perfect entries almost a week. It's usually my goal, 3 to 6 of these a week. If you need more trades, I tend to do the continuation model, especially if trend is very strong. Everything said in this video is not financial advice, but let's get right into it. So essentially, guys, you know, I have my external high, my external low. Now these are two pools of liquidity. As you guys know, if price is trading in between these two pools, I tend to not really trade. Anything in between, if we're stuck in a range, I most likely won't trade this. So essentially here, if I'm bullish on the week, my draw is sitting higher, and I do have an external, we're close to it. I'll look for price to obviously take this external out. Now, but when we do, what I look for here essentially is if we do have a higher time frame for value sitting lower, that's absolutely fantastic. So when you guys are playing these reversals, a lot of people will take without expansion, without a fair value to premium sequence. A lot of early entries come in between. So remember, the Rev models work best off externals. Now internals is fine as well, but you really got to have your buys pinpointed. Because even with these Rev models here, you can take internal and then continue lower, but this is also your PT number 1. This is where you drag your stop loss break even, pardon me. And this is usually where you secure your trade. Other than that, of course, this full external high will be main price target. Any internals in between is also great. So nailing these perfect entries, the possible lowest pullback will come from the structure high. So when you're looking to trade this, extra confirmation, the fair value gap, higher time frame, confirmation number 2, the sweep, of course, confirmation number 3, guys, very important, the neckline needs to be created, or the shift in price, above the low. If it's below the low, I've noticed sometimes less of a chance will continue higher. Now, that's just preference in my opinion, but I definitely do prefer it to be above. Number 2 will be any type of inversion is also extra confirmation if you need that. So an IFEG. Number 3 is, of course, the expansion. Super important. This expansion will provide me with very clear fair value. It'll provide me with strength, and it'll provide me with my outlook. What am I looking for? Now, the best entry, of course, will always be closest to my structure high. So this structure high that was created is great. This is exactly where I'm looking to retrace. I can't retrace all the way up here because there's a chance that this high will fail to get taken. So this low here will at least give me room to target some sort of internal high and tend to always end this trade green. So you also have inversion. If you do have BPR as well, that works out fine. That's fantastic. But this model is very simple, but the toughest part is your bias and timing. Some people don't wait for the expansion. Some people don't wait for the neckline. If you don't have a neckline, I personally won't take it. Some people won't wait for a market structure shift. Some people won't wait for maybe an inversion that's holding price lower, or maybe your bias is incorrect. There's a lot of things, of course, you guys need to go over, but today I am focusing on entry. Where do I look to enter? Now, let's go to the chart here and I'll show you an example. So as you guys can see, very clear price action, very good. I do have an external low. So what you do, I'll grab the low, I'll expand it. Now this neckline, perfectly created right above the low. It's exactly what I want, above the low. If it's below, I tend to not really care about it and I won't take it. We do have an external high sitting here. Now, like I said, guys, internal and external is based off which time frame you're on, of course. If you're on the 30-minute, this is obviously going to be some sort of internal, but even on 15-30, this here, guys, is actually an external. So that low is very nice. So let's just grab this. Let's go back here, go back to the 1. Perfect. Now, essentially what I look to do, I look to expand. So we have a large fair value gap here. I look to inverse it with expansion and fair value sitting in between. Now, when you guys are taking these type of trades, an inversion is extra confirmation. If you do like to trade inversions, absolutely fantastic. You can wait for that. Now, this fair value here will provide you with the fair value premium sequence. So this fair value gap is looking to target this high here. Without this high, this trade is no good. You need an objective in price. So strong expansion, strong shifts, and your entry will obviously be as close to fair value as possible. Krabby, where does your stop loss sit? Usually around the previous wick low. So in this case, it'd be around 13, 14 points. My main price target sits at 50 points away, so it's a 3.7 R. Absolutely fantastic. Now, any internals, like I said, fantastic scale spots. But look, every time I look for my entry, it'll always be closest to neckline. Now, is it okay if we retrace to here? Yes, absolutely fine. If we retrace to this fair value gap here, that's completely fine. Just have maybe your stop a little lower at 18 points, which is still in my range. So it's around a 2.8 R. But if you need that extra confirmation, guys, you can take the flip candle. So essentially what the flip candle provides you with is usually the momentum that we instantly just continue higher. So essentially a red to green candle. So retracement, once we start flipping green, start showing strength, you can take your ads. Now for scaling, of course, any internals is also fine. Don't let 40, 50 points just go off the table like that. Absolutely not. We're traders. We're in and out for the day. Now, once I leave my runner here, the way I like to do my runners, guys, every previous pullback low, I'll move my stop, move the stop, move the stop, move the stop, and just continue and continue and continue. So every pullback low we create, you move the stop until you stop continuing, right? So let's just put this on 7X. Drag my stop here. Let's continue. And there you go. Stop that in profit for 102 points. The easiest way to do your runners, especially on the 1 minute, these pullback lows are absolutely fantastic. But like I said, the best spot to take these trades are always at the structure. My favorite spot to enter, if you are looking for continuation models as well, draw needs to be very clear. But this is my favorite model. This is the model that I perfected. Knowing your internal and external ranges are very important, so please watch that video. Other than that, this is how simple this video is. Structure, bias, expansion, clear entry, clear premium sitting at the high, fair value premium, that's it. That's all you need. That's how simple this model is, and it's very, very effective. And if you guys like to see me trade this live, of course, you guys can always join the Cord. And yes, I'll probably do live trading for free for you guys. You can see me trade these models live, execute them live. They're absolutely fantastic. If you guys need a video on the continuation model, I can obviously do that for you guys as well. Make sure you subscribe. I'll make sure to post a lot more content for you guys. Thank you.